Let's get a read on a little more depth in the U.S. session. And for that, Phil Streible from Blue Line Futures is joining us live from Chicago. Phil, welcome to the program. Good to see you there. Talk to us about the session that was in your part of the world.
Well, I mean, if you look at the U.S. equities, they actually were kind of two-sided as far as the trading. We saw quite a bit of optimism out of the gate, despite the weak jobs number. This has been one of the most hated rallies of all time. We've been up about 39.6% over the last 50 trading sessions. The NASDAQ is near all-time highs, and a lot of people can't justify it due to the fact that there's no growth out there, rising unemployment, the number of jobs that are going to continue to be lost because a lot of these businesses aren't coming back. We really think that the optimism is going to fade and U.S. equities will also pull back.
Okay, so that's an interesting one because I was speaking with a guest earlier on who was saying, look, the news doesn't seem to really matter too much when it comes to equities. We had that jobless claims report out, which disappointed on the continuing claims front. We've got a non-farm payroll report that's expected to show unemployment of 20%. I mean, when do you think then, or what will be the trigger for markets to sit up and finally take notice of some of these metrics?
Okay, think about this. Back in February, you're running a business, whether it's a restaurant or a retailer, you sold all your inventory, you shut down because of COVID. 2 months have gone by, there's no cash flow coming in whatsoever. You finally, a week before the reopening, you get your new inventory in, and then the protesting, the looting, the riots, now your business is destroyed. All your inventory has been stolen. You're going to have to go and do this all over again? I don't think so. I think a lot of these jobs are truly gone. And I think that after a while, you're going to see it weigh in on the U.S. economy. We are in a situation right now. There's no growth, no inflation. The Fed is handcuffed. This is a fear of missing out trade. The only sectors that have done well are technology and healthcare because they're needed items.
Yeah, you raise a good point. When it comes to U.S. markets, of course, the consumer and the economic recovery, it's the consumer that is really key. Look, a lot of people haven't sort of weighed in on how these riots are going to be impacting consumer sentiment. Phil, how do you feel when you look at what's going on across the country in response, to what's seen as a lot of inequity? And that's the thing, is that yes, it was one incident that sparked this civil unrest, but you have to think that the unemployment and the inequity in the country is also helping to fan the flames. That's going to be very damaging to the consumer.
Look, you say across the country. I live across the street from Best Buy. That was destroyed. Jewelry stores around me have been destroyed. Every cell phone store. These are destroyed businesses. I live in the heart of Chicago. I mean, they'll have to rebuild it and everything, but I'm telling you, it's the smaller businesses, the local businesses, the ones that are, owned by individuals. Those are the ones where you really got to scratch your head and say, am I going back again? We saw bankruptcies, they spiked dramatically in this last month, and that was because of COVID. And I think because of all the protests, you got to think that they're not social distancing. This COVID's probably going to come back, and it's probably going to come back with a vengeance. So it's really questionable how many more legs this rally has right now.
Okay, so Phil, how are you positioned then? Where do you look to get a little bit of safety in this environment?
So I think you got to go back to the basics. You got to look at gold. We saw gold, it dipped just below 1,700 at one point today. We saw value buying in there. And I mean, as it runs up and it gets up to 1,750, 1,780, you've got to let some out. And it's in a trading range right now. But once the realization of those jobs being lost and they're not coming back, we'll go into the next phase of the economy, which is stagflation. That's where you have no growth, you have rising inflation, and you've got a handcuffed Fed. That's where I think you've got to go into gold, bonds. You've got to look at the dollar index again, and you probably want to be short some equities.
How high, Phil, do you think gold could go?
I still think gold's going to 2,000 by year end, and I'm much more optimistic in the next year. We are going to have a pullback in gold. We might be doing this trading range right now in gold because everyone thinks the economy is coming back, that all these businesses are coming back online. And the reality is that people haven't had any money. They've got no cash flow. They're not in business. So They don't have all this money to go out and just spend. The Fed gave them and the Treasury gave them their $1,200 check, their $2,000 check. They've already spent it on, their mortgages and just trying to stay afloat.
Yeah, it's pretty scary stuff. All right, so when it comes to where you are looking or viewing the U.S. Fed and its next move, you mentioned that it's handcuffed. Is it negative rates territory, the next move there?
They say they're not going to do negative rates. Okay, so what they're going to do is they're going to target rates and are trying to hold them at specific levels. That's why we're starting to see the yield curve just bend a little bit, not too much. The Fed's going to hold these interest rates at these ultra low levels for an extended period of time, and they've got to go to more creative tools out there. So I'm not sure if it's another round of QE, but they've definitely got to do something over these protests and riots. We've already seen the state of Illinois, which is one of the most bankrupt states out there, apply for a $1.2 billion federal loan today. That's only the tip of the iceberg. So I think other states out there are going to do it. I think the U.S. I'm very upbeat, but I just think that equities have gotten a little too far ahead of themselves right now. I think there's other asset classes that are out there. There's other value that's out there.
Yeah, well, Phil, we don't blame you for not being upbeat considering all that's going on right outside your window. We're happy you're safe. Thanks for joining us.
Thanks for having me.
Phillip Streible there joining us from Blue Line Futures in Chicago.